Hello, my name is Eduardo Amen from group number 7. My team members are Alexandra Burchard Van Kilney, Aaron Carstetter, Marcel Cruz, and Juan Carlos Gutierrez Sanchez. I will be going over the strategic analysis for Charles Schwab Corporation. Charles Schwab is a leading discount broker offering investment services with lower commissions and fees than the competition. Its purpose is to act as a hybrid broker and at the same time help everyone be financially fit. Charles Schwab's organizational strategy is to fully utilize technological advancements and branch locations. Their objectives are to have an integrated platform and to span across products and services. According to its own description, Schwab's core values can be summarized as follows. They are to provide clients with the most ethical financial services, be fair, empathetic, and responsive in serving our clients, to strive relentlessly to improve what we do and how we do it, respect and reinforce our fellow employees, and the power of teamwork. Schwab is intently focused on its customers in offering personalized relationships to the individual investor, fact-based and conservative guidance, and delivering superior customer value. As you can see on the slide, Charles Schwab's target customers are individual investors, including self-directed, do-it-yourself investors, independent advisors who use Schwab's various trading platforms, and those seeking investment advice and financial planning services. Charles Schwab's current strategy seems to be sound, especially as it attempts to gain access to new clients with low cost and high value services such as online banking with no ATM fees and competitive interest rates. As you can see on the current slide, Charles Schwab's current strategy and how to get there. They want to gain access to new clients with low cost and high value services. How do they plan to get there? Is with online banking, no ATM fees, and competitive interest rates. They want to offer highly competitive price trades and research tools. How to get there would be to gain relationships directly with investors. And they also want to sustain and grow investor relationships. That can be achieved through offering more profitable and lucrative advisory services. Now we move on to finances. And as you can see on the graph, we have the profitability ratios. The decline that is shown in the past 3 years reflects the firm's lack of performance because of its inability to effectively use the firm's assets to generate profits. The current strategy of Charles Schwab is to allow the firm to understand its many sources that allow strong performance to affect the maximization of profits. This is not in the slide, but I will talk about Schwab's total debt ratio. The total debt ratio of the Charles Schwab in the past years portrays the firm as an ailing financial institution. Furthermore, the most current statistics illustrate Schwab's leverage and lack of maintaining a healthy, balanced profit base. It is evident that Schwab's borrowing and lending practices may have caused the firm to be negatively impacted. For example, the firm's total liability increased from 2007 to 2009 to the unprecedented amount of $31,804 million. However, the market leader is currently still able to generate revenue from its broad business segments, which have seen a healthy amount of traffic and demand. The firm currently has plenty of competitors who are willing and able to take away the market share that Schwab has attained over the years. The adaptability of the firm is crucial in the given economic environment. The firm needs to create new opportunities for profit to be realized along with greater barriers for competitors to not compete with. More detailed information about the competitor's financial profile in comparison to Charles Schwab Corporation can be found in the appendix. in our written document. As you can see on the screen, we have on one column all of Charles Schwab's competitors, and they are Ameriprise Financial, TD Ameritrade, T. Rowe Price, and E-Trade. On the right hand side, we have all the profitability ratios in comparison to Charles Schwab. As one of the top 3 brokerage firms, Schwab Corporation helps people save, invest, and manage their money, as well as serve independent investment advisors and companies sponsoring retirement and stock plans. Schwab offers services over 300 branches in the U.S. and 1 office in London, next to a very sophisticated IT platform that has been developed over many years. In order to keep a leadership position, Charles Schwab did draw more importantly on its intangible and manpower resources, such as the firm's culture, the ability to mobilize and quickly deploy new IS/IT to achieve business objectives, human IT infrastructure, which means skills and management capabilities, excellent management practice capable to align IS and business strategy, brand name and recognition, management style, flexibility, as well as leadership capability and vision. As you can see, the financial service industry is divided into 3 categories. Those 3 categories are as follows. They are independent financial advisors, traditional and online brokerage firms, investment banks, and one general theme is common to all market players. Those are: clients require strong online service capabilities, traditional market participants need to invest heavily in technology, and threat of cheap services provided by online brokerage firms. The 2 most important segments are independent financial advisors and brokerage firms. They cover about 70% of the retail market, have a large asset management firms which have begun penetrating the market, and offer sophisticated mutual funds with better performance. FINRA, known as the Financial Industry Regulatory Authority, is the largest independent regulator for all security firms doing business in the U.S., which oversees nearly 4,700 brokerage firms. Which represent approximately 95% of market share. The top online brokerage firms are TD Ameritrade, E-Trade, Vanguard, Options Express, Charles Schwab, and Fidelity. TD Ameritrade and E-Trade started their business as discount brokers, benefiting from the new opportunities that the internet offered. Charles Schwab, Vanguard, and Fidelity used to be traditional brokers that had to keep up with the new pace of technology. The rapid growth of the new online brokerage sector can be explained by lower costs, increased convenience for the end customer, better control on portfolio management, free market reports and info through the net, and professional advice over the phone. Why? Well, technology has provided the necessary tools to offer efficient client services, keeping operating costs at a reasonable level and therefore benefiting from large economies of scale. The largest competitor for Charles Schwab is Fidelity, who has positioned itself in a similar customer segment and claims to offer some of the same core competencies as Charles Schwab does, such as sophisticated IT systems, qualified professionals providing investment advice, and asset management. Schwab's return profile has changed over the years, coming from a company that was mostly earning revenues from the brokerage business to a more diversified structure where less than 20% of the revenues come from client trading activity, the remainder being earned by asset management and administration fees tied to our mutual fund and advice offering. What are these opportunities? These opportunities can be found on new products. There will be 76 million retired Americans and they will need adaptive investment products with risk-adjusted performance that is sustainable over time on top of high-quality investment advice. We need to expand options. 401k plan sponsors are looking for well-performing funds as well as reliable investment services. And they also have to internationalize. There is a growing demand for investment products and professional advice outside the U.S. where demographics look similar. We have to look into Porter's competitive forces model, the intensity of rivalry among the existing competitors in the industry. In this case, it's Fidelity over Schwab. It's its footprint in the growing 401k market. Who are the potential threat of potential new entrants? Regulators are to be nervous about letting new entrants into the finance industry. This limits potential threats. Threat of substitute. Schwab developed and became the first major financial service company to permit web-based trading as a traditional product substitute. The bargaining power of suppliers. Schwab must evaluate this force to leverage the bargaining power of its suppliers to their advantage. Bargaining power of customers. Schwab has excelled in service, but they must entice customers for their investment. The strategic recommendations that we came across were Schwab should focus more on profit maximization by limiting the cost base or attract more profitable business. Given the overall changes within the economic region, Schwab should consider to expand internationally. Schwab's target client group should be more focused on rather the low end or the high end of the market. Schwab should also identify e-commerce to effectively pursue customer satisfaction. Schwab needs to focus on company 401k plans and manage to appear on their list of preferred partners. And discount brokerage offering attractive pricing should remain their basic value proposition. This concludes our company analysis. Thank you.